and today we're going to focus on one of the most key concepts of technical analysis called support and resistance. Support and resistance is one of the most important concepts to understand in technical analysis. We're going to be going over what support and resistance are and how to use them in real charts. So, support and resistance are areas in price that cause a pause in price change or a reverse in price charts. So what this means is that when support or resistance reaches a certain price on a chart, it either changes its direction or pauses for a little bit and then changes its direction. So for support, when prices reach a certain area, which is below the original price always, they tend to move up because the demand of the asset is increasing. So as you can see, at a certain point, which is the red line, it causes a reversal and goes up. This is because the asset is more wanted when the price is lower than the original. So, resistance is the exact opposite of support. So basically, when prices reach a certain point, which is always above the original price, they tend to move down because of the supply of the asset. So, on this chart that I have for you all, you could see that as the price keeps going up and up, it hits a point where the supply is more than the demand. And what this means is that it's going to keep going down. As you can see, it goes down on the chart. So this would be resistance. So, support and resistance can be found in all time frames. Whether it's the daily chart or the 1 minute chart, it could be found anywhere. So let's look at some real charts to grasp a better understanding of some support and resistance. So, this is the QQQ 1 hour chart. As you can see, there's a lot of candles on this chart, and let's see if we can find some support and resistance. So, where's the support over here? Okay. So the support's over here, and the reason why this is support is because there are many rejections of this price in the upside. One thing to mention about support is that the more times the price bounces off of that support that you're looking at, the more likely it will have a breakout. So let's see if we could find some resistance on the same chart. Where would be some resistance? Yes, over here. So the reason why there's resistance over there is because there are many rejections to the downside over here. One thing to mention as well is that it has the exact same rule as support, that if there are many rejections of this price of resistance, then it is more likely to be broken out. Go. So let's look at another chart to see if we have the idea of support and resistance now. So this is the Bitcoin 1 hour chart. As you can see, there are a lot of candles on this chart as well, but let's see if we can find the support and resistance. Where would the support be? Yes, so the support would be at this area. The reason why it would be at this area is because as previously stated, there's many rejections of this price in the upside. So let's see if we can find the resistance now. So the resistance would be over here. The reason why is because previously stated, the resistance is when there are a lot of rejections to the downside, which there is over here. And one thing to mention as well, as previously stated, that the same rule applies to every support and resistance. So, sometimes support and resistance doesn't always work by itself. For this reason, you just can't use support and resistance alone in trading. You must use other factors of technical analysis on top of support and resistance. So, I'm going to show you an example of support and resistance not working all the time. So as you can see, I have another chart pulled up over here, and you can see as the price goes up, it breaks the recent resistance and goes up. It doesn't react to the resistance. So this would be a prime example why you shouldn't just use support and resistance in trading, but other factors as well. Also, one thing to mention is that support can change into resistance and vice versa. This happens while higher highs, higher lows, lower highs, and lower lows are created. In basic terms, higher highs, higher lows, lower highs, and lower lows happen in price action. They are when they break support and resistance. We have a more detailed video based on price action coming out soon. But for this example, in this chart, you could see how the price breaks the previous resistance and then furthermore uses it as support the next time it reaches that price. This is a prime example of resistance turning into support. And vice versa. Support works the same in this situation, in this chart. You can see that it breaks below the previous support and then uses the previous support and uses it as resistance. Alright, so quick breakdown of support and resistance is that there are prices that price reverses either to the upside or downside. They're useful in technical analysis but cannot be used by itself, as sometimes this does not go as planned. You should always use other technical factors. Also, support can be turned into resistance, and resistance can be turned into support. Alright, that's all that we have in this video today. Thank you for watching, and if you have an idea for another video that we can make at a future time, then please comment down below.